Real estate prices in China and Hong Kong are beyond high. They're astronomical. They're in a bubble, and that's finally starting to be felt. Everything that's going on in the US, we've got the fear of global slowdown. Maybe it's finally here. We've got rising interest being the catalyst. Prices are finally beginning to slowly stabilize. But how will this scenario unfold? You came here for the truth, so let me unveil that for you. Today we're going to have our focus entirely on China. I want to show you what's going on with their real estate. I want to talk about geopolitical issues. I've got a lot of information to cover. Let's begin by taking a look at this article out of the South China Morning Post. A decision by Country Garden Holdings, the mainland's largest developer by sales, to cut prices by up to 30% at projects in two cities during the week-long national holiday has sparked angry protests by scores of buyers who paid full price ahead of the discount. So imagine that you went out there to pay $100,000. Let's just make up a number. And then you paid them money, and then they have this promotion. They're only paying $70,000. Don't you feel that that is quite a significant decrease? I mean, we're not talking about a shirt at the store. We're talking about real estate. You don't see prices 30% discounted at something like a condo development. This is really not something that occurs all the time, but they make the argument otherwise. The demonstrations come after this company lowered the selling price of its residential project from 10,000 yuan per square meter to 7,000 yuan per square meter. A significant drop here, depending on the size. I'm sure there's a difference here, but up to 30% in these two projects. This may not be the case for, becoming a widespread issue, but I just wanted to highlight it and bring it to you. This could be because of multiple reasons. The demand simply might not be there, or starting to wane in particular areas, or prices are simply too high. They're not getting that demand. It could be a whole bunch of issues, in fact. All right. This other one, it's saying they slashed by 25%. It all depends, right? The company is basically saying, look, this is a regular promotion during the holiday. Typical that we're going to run a promotion. Personally, I don't know. I didn't track it last year. However, and actually, if somebody wants to comment on this, they can. I don't think 30% or 25% is realistic. Not for real estate. I could be wrong on that, but you let me know. I just think that a discount of 30% probably suggests that these places do not have as many people as they need to get in here. They're willing to cut from their profits to ensure that these places remain occupied. Then we're looking at this further down in the article, talking about the same situation, and it says these include distribution of discount coupons worth as much as hundreds of thousands of yuan off that can be used to offset the price of a home purchase, referral schemes where a buyer gets a discount for introducing a second buyer, and outright reduction in selling prices. These are the, all the projects that are happening. They're trying to give incentives to people. So they're offering them quite a bit. I mean, coupons on this, looking at the referrals or affiliate programs that they have on homes, and outright reduction in selling prices. They're doing anything that they can in order to get people to buy. That doesn't sound like euphoria to me. That sounds like panic and desperation. You have builders that build these, and they essentially get the plans, they start digging, and they're hoping that they're going to be able to get occupied by perhaps 80, 90%, whatever their goal is set to, upon getting that building under construction. You want the money as soon as possible, and then suddenly they don't have all of that they hoped for. So what do? Well, they start running promotions, they start cutting prices, and so on. As developers roll out incentives, sales on second-hand homes in smaller mainland cities have tumbled in the past 3 months, signaling the end of a 2-year market boom. All right, so that's the information coming directly out of the South China Morning Post. I just wanted to bring that to you. I think it is very important to cover what's going on in an area like this, especially where they have so much attention on real estate, and it seems like this could never end. It will go on forever and ever. But suddenly things are changing, especially what's happening here with China and the US playing a big role. This right here is the video. You can see for yourself if you're interested. But essentially they're talking about, smashing the sales offices and everything that they did here. You could see the video. It's a short video, in fact. But I'll have that in the description under the sources at the bottom. And then look at this article here. Sales of newly completed flats flopped for a second consecutive week in Hong Kong as a stock market rout, rising mortgages, and the worsening U.S.-China trade issues deterred buyers from 2 newly completed apartment projects in the city. All right. This particular one only sold 20% of the flats offered. They want to get to the range of at least 80%, but we're talking more like 90% plus. Okay, and suddenly they're only getting 20%. That's huge. That's a huge difference. Okay, so that's that. They're talking about more of this discounting by about 20% here in this case. In this other one, 43 of the 130 condo units were sold. This weekend sales results cannot be compared with those of a couple months ago. The market has been hit by the headwinds because of what's happening in the US and China, rising interest rates, and the launch of the heavily discounted home ownership scheme, which provided more affordable prices for first-time buyers. All right, so these are examples that we need to be using here to suggest that prices are either flatlining, they're slowing down, or in some cases, they're actually dropping. Okay, it depends on where you look, depends on many factors, but that's that. Moving on. Looking at the data right now, you can see this. Deutsche Bank provides this here. Ratio between per capita property wealth increase from price appreciation and disposable income. All right, you're looking at the different areas, and you could see, I don't want to butcher the pronunciation, so pardon me, but Shenzhen, you've got Beijing here near the top, Shanghai also as well. And you can see these if you're familiar with them. I'm sure if you live there or have family there, perhaps you know where these areas are better than I do. However, just looking at this, you can see the extreme ratio between per capita property wealth increase from price appreciation and the disposable income. There's a drastic ratio between these two in some areas. Okay, so obviously there's a lot of focus on the price appreciation in some areas there, more so than others. Okay, then we look at on the right hand side, aggregate property wealth increase from price appreciation versus disposable income in 37 major cities. Looking at this here, comparing the two, it's priced in their currency, renminbi, but essentially what we're looking at is the same kind of data, that a lot of these areas are really showing us that the wealth that they have is based on the price appreciation of their homes. Now, you tell me, you think for a second, what would happen if the prices of these homes come down? I think we're going to have a big problem. This right here is essentially talking about the trade issues that are going on with the US, with China today. They're also discussing the fact that, well, you know what, we're not going to call China a currency manipulator, even though we said we would do that a few years ago. That's off the table right now. They're having productive talks. Don't worry about it. Everything is just fine. Well, we'll see about that. Right now, it's not looking good. There's constantly tariffs been increasing on both sides. There's a lot of talk saying you're the problem, and the other side says no, you're the problem, and nothing at all has been resolved. I've seen no resolutions whatsoever, so we'll see how this unfolds. Of course, I will bring that information to you. And then we go to this. China has been really expanding into areas of Africa, and a lot of that is simply because they're finding this partnership to be very beneficial for them. They're doing so. In this case, Angola secures $2 billion in infrastructure financing from China, and that increases the amount. They have a lot of deficits right now. Angola is really heavily in debt. I saw in here somewhere that, despite the fact that they are Africa's second largest oil producer, they are not able to really make ends meet at this time. So they're trying to expand with China being right there now. This is very beneficial for China as well. They're trying to get a foothold into Africa. They are trying to expand in Africa, and they're doing a good job of it. There's no doubt about that. This is also important to note with their expansion in South America as well. So you look at that, they're trying to do business. Venezuela's there. I mean, many different countries, in fact. Their expansion is going on all around the world, and they're trying to partner up with those countries where the U.S. is trying to shy away from, or trying to necessarily not do business with. Okay, so China's trying to scoop all those partners up. They're willing to do business. So China here is obviously capitalizing on that. So I'm going to end the video there. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps us support this channel. So do appreciate that very much. And if you want the financial education you were not taught in schools, these two books have it all. You can actually flip through these if you'd like to. You can do so at Amazon. There's a link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.